Hey, trying to fight the elements, meaning trying to do a recording outdoors, which can be a challenge. Just had to put our cat indoors who was meowing incessantly. Got overhead flying airplanes. We got a dog barking over there. I'm sure a lawnmower is going to kick in here pretty soon as well, but hey, I'm just going to try to get through this. I just want to be outdoors today. It's a nice day. And talk a little bit about how deals can improve from the time you put a deal under contract. Our latest deal has gone through some nice adjustments from the time we put it under contract until now, where we're still a ways out from closing, but we're approaching that time. And one of the things that happened, fairly late in the game is we looked at the possibility of switching lenders. And the reason we did that was we got more proceeds, which reduces the equity requirements. And that just means that there's, less room for equity, less investors. But if you are one of the investors in the deal, the less investors in the deal, the less you have to share the pie with other investors. So that boosts your returns. So that is a nice feature for those people that are in the deal or getting in the deal. Another thing that we liked about this lender is they gave us flexibility on the rate cap. Right now, especially with interest rates rising, lenders, for the most part, they require you to purchase a rate cap. And they're not, they're getting more and more expensive. I was going to say they're not cheap, but they're getting more and more expensive. Just to give you an example, the rate cap that we were going to purchase with our own loan was over $800,000. But this lender is giving us the flexibility to escrow that $800,000 plus and keep it in a fund and available if and when we need it. There goes one of those overhead airplanes, as opposed to purchasing the rate cap. The rate cap, that money's spent. That's $800,000 plus. That's you're never going to see again. In this case, we're escrowing the funds, and if we don't use it, we can return those funds to investors and improve the returns further. So at least there's the potential there to return some investor capital, which is a huge advantage over just a sunken cost, which is a rate cap. So that's two things that have really helped. The other is just the time and the combination of how rents are increasing so rapidly. In the market that we're in, Tucson, Arizona, the rents have been skyrocketing for the past couple of years, and nothing has changed. And in fact, the time that we went under contract until now, we're actually putting deals or renewing leases and getting new leases at our pro forma rents without having so much as to replace a toilet. I mean, we haven't taken the property over, and we're already reaching pro forma rents, or I should say the past owner is. When we take over, we'll implement our business plan and improve upon those numbers. So that's three significant things that have helped. And then also, and this isn't something you can always bank on, but the market had shifted. The debt market had shifted quite a bit, and where we were able to go back to the seller and negotiate a $1.5 million credit, which is effectively reducing our purchase price $1.5 million. So there's four significant things that have happened from the time that we put this thing under contract. So the deal looks sweeter and sweeter, and we're just feeling better and better about it. This goes for any deal out there. Always be looking to improve from the time that you go under contract. You never know what you can get. All right, thanks for hanging out. Hopefully it wasn't too loud and you could hear me talk. All right, see you next time. Bye-bye.